Well, let's look at our first stock, Richemont. Richemont manufactures and retails luxury goods. The company produces jewelry, watches, leather goods, writing instruments, and men's and women's wear. It has a market cap of 596 billion rand, a PE ratio of 22.48, and a dividend yield of 1.6%. Now, Richemont has been a darling of the market for, I wouldn't say the last 5 years, but up until about 2013, it went from 16 rand all the way to 100 rand, and we've seen it underperformed the markets since about 2013. There has certainly been issues in its main market, China, where the majority of its growths come from. I mean, are you concerned about growth figures for Richemont?
Yeah, I mean, if you look at the latest sales updates, I mean, it wasn't good. I mean, we've had very flat sales out of Richemont, and that for us is concerning because, you know, while they were growing fairly well, a lot of that was, you know, the currency translation. So with the weakening rand, if you looked in, at the Richemont listed in South Africa, not the Richemont listed in Switzerland, I mean, you saw this massive appreciation in share price. We starting to get concerned. I mean, if the rand doesn't continue weakening, you know, and that rand hedge component doesn't save the stock, we think that the actual share price, the capital gain performance of the share might be a little bit more flat than we've seen recently. So we have actually exited for a number of our portfolios, and we're not currently holding the stock. You know, I don't think there's too much downside risk on it. I mean, it's an incredibly established business, but you've already mentioned the sales figures are struggling a little bit, and a lot of that coming because of the legislative crackdown in China, you know, especially in the whole gifting culture. And I think, you know, it's going to put a little bit of pressure. Flat sales, that's, you know, at a 22 PE, that looks fairly expensive without some serious earnings growth.
And you mentioned currencies. We had, you know, the unpegging of the Swiss franc. You know, obviously they go by one of their pull factors is, you know, some watches made in Switzerland. So they manufacture a lot of these goods in Switzerland. When we had the unpegging, we saw the Swiss franc spike, so that wasn't great for their input. But at the same time, we've seen the likes of platinum and gold come down, even diamond prices, so their input costs may be mitigated slightly by that. I don't know, I just feel you've got brands of 200-300 years old. You know, that's you can't compete against something like that unless you started 200-300 years ago. And you've got a big bling culture, you know, coming through from the Middle East, in Asia, even throughout Africa and India. I don't know, I just think the core brands are still very exciting. Yes, we have had a slowdown in sales, but you don't see that bouncing back maybe in 2 years' time or so?
Yeah, definitely. I mean, if you look at the forecasts, you've got, you know, the next 2 years they are forecasting luxury goods sales to be a little bit flatter. I mean, especially if you look at the LVMH as well. But then really a pickup in sort of 2018, 2019. So I mean, whether that's going to price forward, I mean, the markets are always looking forward in the next year or so, and we will see another re-rating. It's definitely possible. And I mean, like I said, I think the downside risk on this one is very, very limited. I don't think you're going to see a massive retracement in Richemont. It's a very stable, very established company. So it's difficult for me to say I'm going to buy it because I'm not holding it in my portfolios at the moment, and we have exited. But yeah, a decent company, just a couple of concerns for us.
And as you can see from that share price, you see it's been flat for a very long time. You know, fundamentally, this one's always looked fairly expensive. Now it's trading on a 20 times or so multiple, which historically is quite cheap, but obviously sales have been really flat. You know, personally, I remain hot on this one. I think it's a great rand hedge for South African investors. It's one of the only, you know, direct rand hedges because they have such little exposure to South Africa. And, you know, I'm patient long term. Gary, are you hot or not?
Yeah, I think it's a difficult one. You've almost convinced me to go hot. I'm going to go hot.
That was my goal.
Yeah, Richemont is, I mean, it's a good company. A couple of concerns, but I'll go hot on it. I will go hot.